Hi Amelia, can you explain engineering and construction insurance? I'm still learning about it.
Sure. Engineering and construction insurance covers physical damage or losses during construction projects. It protects the project itself and, sometimes, the machinery used.
Is this the same as liability insurance?
No, liability insurance covers third-party claims like injuries or damage to other property. Engineering and construction insurance, like contractors all risks (CR) and erection all risks (ER), focuses on the actual project, covering risks to the building or equipment under construction.
What's the difference between CAR and EAR?
CR is for civil works like buildings or roads and protects against damage during construction. ER covers the installation of machinery or equipment, like in power plants. Both policies can also include liability coverage.
What kinds of risks do these policies cover?
They typically cover fire, theft, natural disasters, and accidental damage. They also cover materials during transport and damage due to faulty workmanship.
What happens if there's a delay caused by an insured event?
That's where delay in startup (DSU) insurance comes in. DSU covers financial losses due to project delays caused by damage, such as lost income or additional costs.
How are premiums calculated?
Premiums depend on project size and value, location, project duration, and the contractor's experience. Bigger projects, high-risk areas, longer durations, and less experienced contractors typically have higher premiums.
Does the insurance cover the machinery used on site?
Yes, contractors' plant and machinery (CPM) insurance covers equipment like cranes or bulldozers used on site. It protects against damage from accidents, fire, or theft.
What should we, as underwriters, focus on when assessing these risks?
Focus on the project type, location, and contractor's experience. Well-managed projects with strong safety protocols are lower risk. Also, consider the materials used, some are more prone to damage.
I've heard about bond guarantees. How do they fit in?
Bonds like performance bonds guarantee that the contractor will complete the project as agreed. They're not insurance, but they protect the owner if the contractor defaults.
Are there exclusions in these policies?
Yes, common exclusions include wear and tear, defective design, faulty materials, and war or nuclear risks. Deliberate damage or penalties from contracts are usually excluded as well.
Are there any trends in this insurance?
Yes, green construction and sustainable building are growing trends. Modular construction, where buildings are pre-assembled off-site, is also popular, and it introduces risks during transport. Technology like drones and sensors is also being used to monitor progress and assess risk.
That's interesting. It seems like technology is helping to improve the industry.
Absolutely. Drones and sensors allow insurers to monitor construction in real time, making risk assessment more precise and reducing unexpected issues.